Welcome to the daily update. This is being prepared Wednesday, March 2nd, where I'll go over what happened in the market today and then see how things look for Thursday, March 3rd. We still are in pretty crazy times right now, geopolitically. Europe remains at DEFCON 2. The US, just by the way, is at DEFCON 3, which is what we've been at all along. But things could escalate, things could get out of control at any moment. It's a very volatile situation, and the market seemed to be fixated on that. We're also coming off the State of the Union address, and I did not watch it, but the different things that I've cited for analysis and commentary have kind of concluded that there was a real reversal. The things that had been really promoted by the current administration, it's like, okay, now we need to protect the borders, we need to fund the police, we need, all these things that we were being told the exact opposite not too long ago. But now there seems to be a switch, but there's really no explanation for how this is going to happen. So we're not getting a lot of real good direction, at least from a stock market perspective, of what's coming out of Washington, D.C. And so we're kind of what we need to do is just kind of focus on what we see other places doing instead of being a leadership right now throughout the world. The US is kind of following, if even that, other things that are going on. So that means we need to look at other places for finding who is leading. Do we look at the EU? Do we follow what's happening in NATO? Those kinds of things are just more of the focal point right now. We did have Chairman Powell. He gave his testimony, and that seemed to give the market some support on Wednesday. They liked what he had to say. He has day number 2 coming up on Thursday. He talked before the House on Wednesday. He'll talk before the Senate on Thursday, and it'll probably be pretty much the same thing. If there's any variation, it usually comes from the Q&A at the end, and then how he answers certain questions. So we're in a continued volatile situation. We had an up day with the markets. We're still within that range that we've been in for a while, and nothing has really been decided. As I started recording this, the futures were pretty much flat in overnight trading. So we'll just have to see how things play out, and as different events happen, how the market will react to that. So let's go back over what happened on Wednesday. We did have a gap higher open. The futures were fairly strong during the night. That led to a gap higher open. There was some initial selling right off the bat, but that was quickly met with more buying. And as the day went on, prices did advance and kind of drifted sideways. We didn't see a real push to the upside after we had already gained pretty good ground, but we didn't see massive selling coming in either. We ended up being up 1.86% for the day. We were above average as far as volume. The technicals are more mixed now. We're still in that range, so that hasn't really been decided yet. We're dealing with some potential overhead resistance, especially with the 20 and 200-day moving average, and I'll show you charts of those. We still have some earnings coming out, inflation and interest rates. The big report is going to be coming out on Friday as far as the employment situation. But we saw a massive decline in interest rates earlier in the week, Monday and Tuesday. Well, we saw them bounce back up on Wednesday. And of course, the continued geopolitical concerns. That's not, I mean, again, if you know my philosophy, you know that I look at the charts and then things seem to happen in the world that line up with what's already happening in the charts. Sometimes it's the other way around, where something happens in the world and then the charts react. We're kind of at a mixed point with that too. It just depends on what the market wants to do. They have every reason to go down from here, and they have every reason to go up from here. And so what's happening is we're kind of going nowhere. We have a down day, maybe a couple of down days, then a strong up day, then and we end up kind of being on this continued treadmill right now, which is too bad because this would be a good time to do sideways strategies, a lot of credit type strategies or iron condor type things. But our ADX is still suggesting that we are in a trend, and we're seeing moves that are pretty big. The up day that really has taken us nowhere, that's 1.86%. That's to me, anything over a 1% move is fairly significant. And we're to see us go down a 1.5% to 2%, to see us up 1.5% to 2%, that's not really strange right now. And that's why a lot of the credit type strategies could be a little bit dangerous if we get going in one direction or the other. So what are some comments that we can make? We're back out of correction territory with the advance that we saw on Wednesday. Also, after Tuesday's close, the CNN fear gauge that I look at, it had gone down below 20. Well, we rebounded out of that slightly with Wednesday's action. Prices do remain in a range with the 200-day and also the 20-day moving averages acting as potential overhead resistance. Ukraine and Russia still dominate the news. Interest rates did rebound on Wednesday, and we have oil. My goodness, now it's at the 111 range. So things are really changing in that area. That's the real strong area right now. The Fed Chair Powell, he did testify before Congress, and that was day number 1. Thursday will be day number 2. We didn't really have any significant economic reports that came out. There's more that'll be coming out on Thursday that can have more of an impact. We continue to be overvalued. And as far as our trend, yeah, it shows that we're in a strengthening trend, but our bias is now more mixed, as well as our momentum, because we're just bouncing back and forth, kind of like a ping pong ball or a pogo stick. So let's go through and talk about what happened on Wednesday as far as sentiment. We had been down at 18. We were getting into extreme fear territory. Well, with the advance that we saw, we're back above 20. And looking at this chart, it's a little hard to see, but we bounced up ever so slightly. But we're still down where one solid down day could take us back into extreme fear territory again. As far as the VIX, it declined a little bit on a closing basis after being at a very high level. So fear was really, really going up. And then looking at the bar chart, we closed near the bottom of the range. So as prices went up, fear began to decline. Looking at the VIX of the VIX, kind of the same thing, where we saw a decrease based on a closing basis, and we closed near the bottom of the daily range. Then the Ulster index, which as we're going down, this has a tendency to go up. Well, with the advance that we saw on Wednesday, fear really subsided. It could turn around and go back up, but at least right now, fear is lessening a little bit. Then here's just a longer term view of that same chart. As far as the sectors, every one of the sectors was positive. You had financials leading the way at 2.59%, energy, materials, and then tech had a fairly good day, up a little over 2%. All of them. The one that performed least well would be communication, which has been having some trouble. And then staples, as we go back and forth between growth and value, staples, even though it advanced, we're still waiting to see how that will play itself out. And then here, just looking, energy, it's just been going up very strong. You still have discretionary in last place. And then also communications and tech and real estate are also down since the all-time highs. As far as inflation, this chart, it's kind of longer term. The BDI really increased quite a bit on Wednesday. And then the CRB, man, it was up almost 3%. just look at this thing skyrocket. This is really where I'm getting a lot of my current inflation attitude from. As far as the Fed watch, this is interesting, where we're seeing the 0 to 0.25%, which is where they're at right now. That means that when the Fed meets, that there's slightly, just 2%, but this had gone off the table. Well, after Chairman Powell spoke yesterday, this is slightly back on the table right now, with a almost 98% chance that there'll be a 0.25% to 0.5% rise or increase in the overnight lending rate. But just to have this come back is kind of interesting. We're in a high inflationary environment, but yet the idea that we're going to not even raise interest rates, that some people are even thinking that, is quite peculiar right now. And then we're seeing how the half to 3/4, that's pretty much off the table now, where we're seeing the real increase in the 1/4 to half, and the 0, where they're at now, to 1/4, that's coming up slightly. Okay, technical alerts, most of them were positive because we had an up day. Right at the beginning, the euro set another new 52-week low. Energy set a 4-year high. The NASDAQ started off by going over 13.6, then it dropped below 13.5, then it went back up to 13.7. So dancing around a little bit. The cyclicals, which is a value play, this crossed above 20 after giving a BPI extreme negative reading. Tech, it crossed above 30. That could be positive. The industrials, which is more of a value play, it crossed above 30. The Dow went above 34. The S&P got back above 4,400. And then oil is kind of dominating things here, where it set a 4-year high. First, it went over 105, then it went over 110. And the dollar is still holding up quite well. It's at a 52-week high. So let's look at the intraday chart, where we see the gap up slightly. We gapped up above the daily pivot level, so that was positive. We saw a little bit of a blip up, and then this is what I'm talking about by initial selling. I thought, okay, we're gonna probably go down and at least try to fill this gap. We didn't do that. We came down not quite to the pivot, and then we saw some more buying coming in, and this is good, solid buying throughout the day. Then with a few hours left, it kind of trailed off sideways. And then we did see a little bit of selling going right into the close. So we didn't close at the highs, but this is a pretty solid day. Doesn't really mean all that much in the bigger context until we break out of this range. But now we're getting more to the top part of the range, where just a few days ago, we were at the bottom part of the range. So here, looking at the daily chart, I haven't really made any changes here because we have resistance overhead with that double top that we set a few weeks back. We are above intermediate term support, which goes back further, and we're just slightly above the the daily pivot level right now. So that's a little bit positive, but if we have a bit of a down day on Thursday, we're going to drop right down below. So it's hard to not be cynical right now, because are we going to continue to break up, or are we going to come back down to where we've been before and then eventually break down? We don't know that right now. You can make a case for either side. So while this is being played out, the market is unsure itself until it gets something of real conviction one way or the other. We are back down at 8.55% from the all-time high. So that is out of correction territory and just into a retracement. Then this is another interesting thing. Even with the up day, growth actually declined and value increased slightly. So we're still seeing that shift. Usually when we would see a 1.5% up day, it would be led by growth. That's not happening right now. Here's another thing that compares the growth index with the value index. It actually declined a little bit on Wednesday and is in a downtrend overall and below the moving average. This is another thing. The NASDAQ 100 underperformed the S&P 500 on Wednesday. That is another clue that we can look at. Value it appears to be coming in and taking the lead. As far as our trend, the ADX continues to be strong. It's above 30. It's above the moving average, but on a positive basis, if you're bullish, selling power or selling pressure, I should say, decreased quite a bit on Wednesday and has been decreasing, but we're not seeing a real, at least according to this chart, a real increase in buying power. Then we're still looking to see, is this mass index signal that was generated now last week, is it going to lead to anything? We're starting to trail off after that signal was generated without seeing any kind of a real strong corresponding move in prices. The Arun kind of showing the same thing. Sellers are still in control, but that is declining. Buyers haven't really come back in mass, so that declined a little bit. And so overall, the Arun was flat on Wednesday, even with the solid up day. No changes on our decision point market scoreboard. Down short and intermediate terms, long term is still positive. As far as breadth, we had a good solid day. We saw based on price was up and based on volume was up. So based on price, we're still above the moving average with a little bit of a turn up. We did bounce up slightly based on volume, but we're still seeing this negative divergence between the two. And if we want to see more of a replacement of value taking over and leading the market, we want to see the volume in the S&P 500 start to show some strength, because where we saw this divergence is when the big tech companies, they were going higher and higher and higher, which was pushing the S&P higher. Well, a lot of those companies didn't participate in that. So we saw a real drop off in buying power. The advanced decline ratio was up slightly, but is kind of bouncing around right now. It is still below 0, but it did go up slightly on Wednesday. This is a little more encouraging, where inside the S&P, we are seeing a positive trend now with the new highs versus new lows. So that's showing a little bit internal strength. Then the accumulation distribution also had an up day, because we had an up day and we're above the moving average. Short term, we're coming back up to the 20-period moving average, which might be acting as overhead resistance, at least with the exponential moving average. But the averages themselves are still going down. So we need to break through that for these to turn back up. Our moving average study, we saw an advance with the 20, 50, and 200-day moving averages. And then we're also, you can see on this chart where the 20 EMA and the 200, they're coming together. And that was the high that we set on Wednesday. So if this is going to turn back more positive, we need to break up through that. Or if we're going to do what's been happening, this is going to be overhead resistance, and we could fall back a bit from here and go still in this range that we've been battling with. The MACD crossed a little bit positive with the upward move on Wednesday. STO also went above 0 based on price and as well as volume. So that's a little more positive. The McClellan oscillator is just a little bit above 0. So it was slightly positive. It hasn't really turned the summation index up yet. It needs to have some follow through for that indicator. And I'll show you here in just a second. With the up day, our touchy indicators, the Stoke Rsi, it's already giving us an overbought reading. And the Williams percent R, it's kind of acting a little less excited, where it advanced and is now above 50. The force index, ever so slightly, it's a little hard to see, but we're back in green territory now. And then one thing I wanted to point out, if we count back 5 days, the rate of change, even though we're range bound, it's still calculating this massive low that we had last week. So it's just showing that we may have climbed a little too far too fast, but this still could go higher. But if we go back with what we've been seeing, we might drift a little bit down. We're going to have some real buying power come in to push us up higher. Intermediate trend, the 50-period moving average, we still have a ways to go before we get to that, but they are both declining. The PMO has not crossed over positive yet. And then based on price and volume, still has some more improvement to go, but it is improving. The other PMO study, those that are rising did advance. Those that are generating buy signals did advance, and flat to a little bit higher with those that are above 0 in the S&P. The BPI, that's also providing a little bit more of a positive picture. We had a real extreme reading. Well, we continue to bounce up out of that right now. It would be a lot more positive if we could get back above 50. And then this is just a longer term view of that chart, where we didn't quite get down to this extreme negative area before we decided to turn back up. Moving average rainbow continues to roll over on the top, and we're still trying to get back into the bottom. The stochastics, short term, advanced, and are slightly positive. They're kind of neutral, more intermediate term, where it's still rolling over slightly, but longer term continue to suggest that things are a little more positive. This is the summation index that I was talking about. We just kind of blipped a little bit sideways based on price, but something that is positive. We actually turned up based on volume. So that could be something significant. We're seeing more of a mixed picture now with our momentum studies. Some of these are still negative, but improving, where the MACD has crossed, but others are negative, where some are flat, where the bottom one here, it's actually turning up slightly. Vortex really didn't change all that much. It was more flat with selling pressure in the lead with buying pressure declining. The CCI, and again, I really only show this chart when we're showing extremes, but because we saw a little bit of an improvement on Wednesday, I just wanted to include that at least one more time, as well as this chart, the Sean trend meter. We are bouncing up after having a pretty negative reading. But the CMF, the chicken money flow, even with the up day on Wednesday, it is positive, but continues to decline. RSI has not come back above 50 yet, but it did advance. As far as our trading systems, interesting. Shorter term, the Elders has now switched back to a green bar. And another thing that's interesting is the SAR. We now have a dot that is below current prices, which is positive. And this thing doesn't change all that much. The one thing I like about this system is it gets rid of a lot of the noise, but as it's generating signals, you can see big drawdowns with this kind of a system, and this can really wreak havoc on your emotions. If you're using this for signals and yet prices are going against you, that's not fun at all. Different charts. Heiken Ashi is now switched back to looking more positive. The Kegi chart has turned back to black, but it is moving sideways, so that's slightly more positive. The Renko has not changed anything, so that remains more negative. 3-line break is showing a little bit of an improvement. Equivolume is still showing that we're in a trend overall. 1 day we're above zero, 14-day we continue to decline. So that's where I'm getting this mixed picture from. Point and figure coming off of what the pole coming down here, it's seeing this as a potential pole reversal. But we're going to have to see follow through buying to get some more green X's in here if that signal, that positive signal, is to remain. As far as our fib retracements, we're now coming back up to the 38.2 retracement level. It's now acting as resistance overhead for current prices. So we don't be surprised if we come back down, especially if something breaks with the Russia-Ukraine situation that the world doesn't like. We could see things fall back down. Something good happens, we could see prices shoot higher. Long-term charts, we're getting ever so slightly back to the 200-day moving average. The moving average here on this chart is at 44.63, and we had a closing of 43.86. So we're still under this moving average, but we're getting back closer to it. Same thing with the logarithmic chart. Calculates things the same way. They just look a little bit different with how they're plotted. The special K continues to be negative, and here's the longer term view of that chart. Looking at some of the broad markets, here's the S&P, which I don't know, you could say is some kind of head and shoulder dealy here, but this isn't this is a very short term high with a double top here. The head really should be up here. And some people have said, okay, well, one of these, this is a pretty weird looking shoulder over here. Well, some people have tried to suggest that this might be a shoulder over here. I'm not a big chart formation person. I'm not into the bullish pennant flags and the blah, blah, this, because I've seen them break either way, that something that looks bullish ends up declining and vice versa. So I like to just follow with what I see price doing itself, and and this is why I follow the markets all the time. That's how I get the feel for what is really going on, instead of just looking at a chart that maybe I've never seen before and now trying to interpret some meaning out of that. I would rather just watch things and observe, and then it's like I'm watching the game the whole way. So that's where my philosophy might be a little bit different than other folks. Mid caps, we did have a good up day, but we're kind of at the top end of this lower range, but we still have a ways to go before we really break out of it completely. Where with the small caps, we're just kind of near the upper end of this range that we've been in. FANG stocks, we didn't see, they were only up 0.7% on a 1.5% move. So this is what I'm talking about. We're not seeing a lot of strength, at least right now, in tech. So yeah, they were up, but not the real strength that they had been. ARK was actually down on the day, down 1.10 or 1.10%. So even though we had an up day, Kathy Wood did not have a very good day. The industrials are back right up to the pivot point. That's acting as overhead resistance. We're also seeing this as moving average overhead resistance in the S&P. So we want to break above this for things to turn more positive with the Dow. We are above this as far as the small caps, but we've been still in this sideways range, and we have a moving average right over where we're at, which could act as resistance. Mid caps, kind of the same thing. We're above the pivot, but we have a moving average over top of us, and we have a lot of noise behind where we've already been. And with the NASDAQ, kind of the same thing. Above the pivot, moving averages are still quite a ways away and kind of in this range. And the NASDAQ 100, above the pivot, death cross, where we've been before. So that's why I'm giving more of a mixed picture right now. The Vixen, because we had an up day, it actually did end up declining near the low for the session. The NYSE, kind of the same thing. Back where we've been before, but above the pivot with moving averages still overhead. And this is another thing. The S&P 100 underperformed the S&P 500 on a solid up day. So that's another thing that's kind of, we're seeing a real shift inside the market. The Wilshire, above the pivot, back where, broken record time here, folks. And then internationally, China is really having some trouble, as are all of the international markets. Even though things are going on in Russia, Ukraine, the whole world is watching this. Now, I happen to be watching this a little closer because I'm living in the eye of the storm right now in Belarus. So I really need to pay attention to what's going on just from a personal safety aspect. But the world is watching. As far as our alt stocks, we were up 1.5%, but we're kind of just bouncing around right now. Broad markets, the dollar has been hanging in there. Way to go, dollar, which is good for me personally on an exchange rate basis. And just to give you an idea, when I first moved to this part, it was about 2 to 1. So if I had $10, that could buy me 20 Belarus rubles worth of stuff, and their prices tend to be a third lower anyway. So that was pretty good. Now it's at 3 to 1. So if I have $10, that equals 30 rubles. So personally, yeah, the only problem is with all these sanctions, my debit card doesn't work. So that doesn't do me a lot of, it just looks nice on paper. Here's the weekly chart also as we continue to advance. And this could change. And by the time this week is finished, this chart could look more positive or negative. Oil screaming up here. Now here, I had oil closing at 111, but here it has it at 110.60. Still astronomical and very, very high, but and not fun if you're trying to fill your tank or heat your house. Gold, this is the continuous contract that I'm starting to follow just to show where we had a more than a 1% decline. We're down still above 1900. We want to see if we can break above this high that was set during the whole COVID plunge pandemic. And then here's the ETF of gold. It was down 1% as well. And people are just really confused. Yeah, things are going crazy, so we should get into gold, but then it goes down. Oh, we better get out of gold, and then it goes up. And people are just getting whipsawed like crazy right now. Silver was also down, but it's still above this moving average. And I made a mistake in yesterday's video. It had been acting as resistance before. I said this was support. Well, if silver does start to decline, now this may act as support. I make a lot of mistakes in the videos, and I'm sure you guys picked those out. Bitcoin has been hanging out around the mid 40s or so, just to kind of keep an eye on this market. As far as bonds, we are still declining, and the jury is out. Are we declining here with the credit or the yield spread because we're seeing a tightening stance? Interest rates aren't showing us that. The Fed is still in their purchasing. They haven't really scaled that down yet. So is this signaling that we are going to possibly enter a recession? I don't have the answer to that right now, and nobody really does. We just have to see how this plays out. And then as far as the yield on the 10-year, it looked like we were going higher. We were above 2%. This had been acting as support. Well, we broke down through that over the last couple of days. Well, we bounced back up, and we're right at about the 50% retracement level from the all-time high to, not the all-time high, but the most recent high to the low that was sent during the COVID plunge. And this shows you also how yields really bounced back up on Wednesday, the 30, the 10, the 5, the 2, and we saw an increase even in the 3-month. Internationally, this chart actually changed a little bit. It was showing the Bund, the German interest rate, actually below zero. Well, I looked at this chart today, and it's like they fixed it or something was changed, but it's ever so positive at 0.01%. How'd you like to get that for a 10-year yield? But we have been seeing a decline overall in interest rates. Maybe it's because this is a weekly chart. That might be what's going on here. And daily, we are still seeing bonds, as far as price is concerned, in an overall downtrend. And then corporate bonds had been bouncing up a little bit. Well, they, based on price, actually went down, with the current rate at 3.2%. And this is just a longer term view of that chart. I just watched this because treasuries aren't the only game in town when it comes to bonds. Companies issue bonds as well. And I just like to keep an eye on those and see the interaction between the two as part of the intermarket analysis that I like to do. Relative studies, we're still watching gold. With the advance in the S&P and the decline in gold, we actually fell a little bit on Wednesday. And then I'm also watching energy because oil is skyrocketing up and it's continuing to break out with the moving average turning up. So what are we looking for on Thursday? The S&P is back out of correction territory, but with a 1 or 1.5% decline, we'd be right back in correction territory. The markets remain in a short to even intermediate term range right now. We still have earnings. The battle between growth and value continues. Chairman Powell will be giving his day 2 testimony before the Senate. Economic reports. We have our weekly initial and continuing jobless claims. The big one is probably the ISM. We had the manufacturing report come out earlier in the week. This is the non-manufacturing index that will come out on Thursday. And then this ends up not being a real big thing unless the market wants to freak out about something. The revised fourth quarter readings for productivity and the unit labor costs, as well as factory orders. We like to keep an eye on these things, but they're not necessarily big movers. The big one is going to come on Friday. We still have all these different geopolitical events that I've already talked about. So where I've come now is the S&P is still negative overall, but more mixed, but with a negative slant as far as we're being in that range. We have another good up day, and I might be able to change that. So the short term and intermediate term bias, well, the short term is more positive because we had a good solid up day, but it's still mixed, where the intermediate term is still more negative to mixed. The long-term bias remains positive, but as long as we're below those longer-term moving averages, it is showing weakness, and the longer that we stay there, the more the long-term uptrend could be fading. So thank you. Have a really good Thursday, and I will prepare my next video after the close on Thursday, and I'll talk to you then.